to the technical analysis of forex measures, and let's start our review from the first pair. It will be Euro and US dollar. So the focus remains on the March 8th lower high at 1.3291. After successfully recapturing 1.3200 on Monday, the March 15 reaction low at 1.3004 has become isolated, and a push above 1.3291 is expected to confirm the 1.3004 low as an important euro bear failure, creating additional upside scope to 1.3320 and 31 and 1.3364. A wave equality target at 1.34 to 35 would also be created on a push above 1.3291. On the setback below Tuesday's low at 1.3172 would question the euro bullish outlook. Weekly chart of euro and US dollar trend is bearish. Yes, it was the first pair, euro and US dollar. And let's start our review. Let's continue our review from the second pair, US dollar and Japanese yen. The week's recovery of 83.02 is expected to extend above resistance at 33.83. Monday's low at 83.02 failed to meet its minimum downside requirement target at 82.95, and a push above 83.83 and the lower high at 83.95 would bring the focus back until the last week's 11-month high at 84.80. Only a setback below Tuesday's 83.31 low would question the US dollar bullish outlook, exposing 83.02. And weekly chart of US dollar and Japanese yen trend is bullish. Intraday analysis of Great Britain pound and US dollar. Further Great Britain pound gains are expected above Monday's 1.5913 high to challenge the February 29 reaction high at 1.5991. The low of the current bull wave at 1.5599 has already become a confirmed Great Britain pound bear failure, and a push above 1.3991 this week would bring the October 31 lower reaction high at 1.6167 back into the picture. Good support lies at 1.5746, which will only be exposed should Tuesday's low at 1.5832 be broken. And weekly chart of Great Britain pound and US dollar trend is range. Intraday analysis of US dollar and Swiss franc. The sharp short-term downtrend is lurching lower towards the March 8 higher low at 0.9072. This 0.9072 low needs to be broken in order to confirm last week's peak at 0.9335 as a US dollar bull failure, which in turn would expose the February 24 reaction low at 0.99. Which in turn would expose the February 24 reaction low at 0.8931 once more. A recovery above Tuesday's high at 0.9153 is required to provide respite, but corrective upside risk is limited. Weekly chart of US dollar and Swiss franc trend is range. Next and last pair for today will be Australian dollar and US dollar. Support at 1.0457 needs to hold. If Australian dollar bulls want to keep the inverse head and shoulders base formation on the 60-minute chart intact. However, a push below 1.0457 is becoming increasingly likely, which would bring the March 15 reaction low at 1.0423 back into the immediate focus and create additional downside risk to 1.0196. A recovery above 1.0555 is required to lift the zone, threatening further gains to the 1.0632 and 39 area. Weekly chart of Australian dollar and US dollar trend is range. That's all, my dear traders, for today. It was me, a financial analyst of Grand Capital Company, Sergey Lin. I wish you the fair trends and good luck. Bye.